Nigeria's efforts to attract foreign direct investment have hit a snag as foreign investors express growing apprehension over the country's unstable foreign exchange market. Despite securing over $30 billion in investment pledges earlier this year, actual investments have been slow to materialize, according to the Private Equity and Venture Capital Association of Nigeria. The association's media review highlights the foreign exchange repatriation challenges as a major deterrent, exacerbating the already high investment risk in the country. Oladipo Ajayi, head of fixed income and FX, Chapel Hill Denham Securities Limited, joins me to unpack this. Thank you so much, Oladipo, for talking to us.
Good morning. Thank you very much, Leko, for having me on this morning.
Now, Nigeria received $30 billion in foreign direct investment pledges during the first 9 months of President Tinubu's administration. How much of that has actually translated into real investments?
Well, I think we've been finding it very difficult to actually mobilize this fund to the economy. And of course, it's not something that that I'm actually surprised about, because when you see the level of volatility that we've been seeing in the exchange markets, so it calls to question who wants to actually bring their money in at this particular point in time. So a lot of investors are currently waiting on when they will likely see stability in the FX market, and that sounds more like the best time for anyone to actually want to actually bring their fund into the market. Remember, at the beginning of the year, we started the FX market at an exchange rate of 917 to a dollar. As we speak currently, we're around circa 1,600. So you've seen the movement. That's close to about 80% depreciation on the currency already in the year 2024. So a lot of investment, of course, that will actually lead to more like a cold feet to some of these investors. So I'm actually not surprised now because I'm actually expecting that to start seeing some of these funds actually coming in when we see more of stability in the FX market.
So now that we are seeing a bit of discrepancy on both sides, how significant will that affect the foreign exchange instability that we have seen in Nigeria anyway? How far-reaching will that be? And when you look at Nigeria's overall investment climate, what does that portend?
Well, I think we are getting closer to the end of it, Lakon. For the last 2 months, we've seen a bit of stability in the market. We've seen the currency trading around like a 1,500 thereabout window. And also, for a long time, it's been more about the issue of supply. And but now, just recently, just about last week, the central bank actually was in the market to actually meet some of the pending demands, and that to a great extent also dows the level of volatility that we'll be seeing in the market. So I feel that currently the central bank will see a bit of aggression on the reserve, and that may actually portend a bit of solace to some of these foreign investors that are actually staying at the sideline currently. And also couple the fact that they've been seeing more of like a bit of liquidity in the FX market, whether from portfolio investor or from the central bank trying to actually meet pending demand in the market. And I think that is the key thing. The liquidity of the FX market is actually very key. And when you are actually speaking at your introduction, you mentioned also the repatriation of FX, and that's been one of the key challenges that most of these foreign direct investors have been facing. I don't know, sometimes some years back, we saw the story of MTN. When they were trying to repatriate funds out of the country, how difficult it was, and I also feel that would be more like an hindrance to actually attracting some of these foreign investments into the country. But in a situation whereby the current regime is more like a managed floating system where the markets are allowed to actually trade and actually determine the price level, and the central bank intermittently will come to actually regulate the market, whether by supplying or by actually buying from that market. It's also like a good one to the market. So it's not a market that's actually pegged like the last regime where we were pegged at around 475 naira to $8 for a long time. And I feel that with the current market regime, that could also be more like one of the things that can actually lure foreign investors in the market. And on the part of the government also, also actually mobilizing investment into the oil and gas sector is also very key currently. We saw the sale of Ajib to Oando. And what comes to mind is when Seplat actually bought over their businesses as well. So it seems that in that sector, we are seeing more of local investment in that sector. I also think that we also need to look beyond local investment so as to attract extra FX inflow into the market, which will also, to a great extent, stabilize FX. So if we are able to actually unpack all these things together, and I think this will be one of the catalysts that can actually push most of these foreign direct investments in the country.
Oladipo, some analysts have actually said that they are not too situated with the fact that, despite the fact that we've seen relative stability in the Nigeria to dollar change, that it would further ensure that there will be stability in the forex overall. And they're also saying that it seems to be at variance even with the recently celebrated capital importation of about $3.38 billion in quarter one. Though it was 198%, more than 2023 figures, over 90% of it is said to be debt instruments. So I'd like to be sure if, number one, that is not troubling, and how far reaching or how long do we expect this stability that we've seen in between the dollar and the naira to actually carry on stability in the overall forex regime?
Well, for me, I think there's one big thing that we need to work with, and that is more like what's the Dangote refinery. And if you check our FX outflow, the major part of it comes from importation of refined crude. And if we can find a way to actually work with Dangote refinery, and we are able to actually refine locally, and the government can actually ensure that the Port Harcourt refinery kickstarts appropriately, what that would do to a great extent, it will reduce our import bill greatly. And what that would also do, it will reduce the pressure that we are currently having on FX as a result of importation of refined crude. And because when you look at close to about 50% of our FX importation bill actually is basically for PMS, diesel, and the like. But with the emergence of Dangote refinery, we've been able to reduce the aspect of the diesel and the aviation so if we can actually consolidate on that and actually work with the refinery to ensure the full production of this refined crude, what it will mean to the market is that the capacity to actually supply dollar on the part of the central bank will actually improve. And at the same time, we'll also get a bit of FX inflow from the same company into Nigeria, because we've seen that happen in the past where the company actually repatriated FX from its foreign business into the economy. So if we can actually do that, what that would do is that will help the currency stabilize. It will not only help the currency stabilize, it will also create a bit of appreciation for the currency. So for me, I feel that the key thing on the table as we speak now is still remains the Dangote refinery, and for the government to actually work with that refinery to actually start producing PMS, which to a great extent will actually reduce our FX demand. And because what's currently happening in the market is forces of demand and supply. If you're not getting huge supply to the market, you can also find a way to actually reduce the demand. And one of the ways to reduce this demand is also working with Dangote refinery to ensure that there's supply of PMX in the market. And that in turn will actually reduce the FX need for some of these marketers that always be coming to the FX window to actually buy FX. And that to a great extent will also help stability of the currency. So I think for me that there's still a lot that we need to do around that, but it's actually very possible for us to actually get the currency stabilized.
Okay, well, we can always hope too. Oladipo Ajayi, Head of Fixed Income and FX, Chapel Hill Denham Securities Limited, thank you so much for your time.
Thank you very much, Leko, for having me on.